Welcome back. Today we're going to talk a little bit about renting and buying a home. What are the myths? How do I do it? And what are some programs that are out there that are going to help? So I'm Victoria Mendez with Downtown Financial Group, and I'm excited to share with you some of the myths and horror stories that I actually come across that people think they can't afford to buy, and they end up buying a home and going from renters to homeowners and then eventually to landlords, right? So for me, I want to bring up the first myth. The first myth is I have to have 20% down in order to buy. Nah, that's not true. So right now what you'll see is there's some down payment assistance programs where we finance clients where they brought $17 in to purchase a home, $1,000 in to purchase a home. And so when it comes to first time buyer programs, usually a lot of people think I have to have a high credit score or I have to, make sure that I have a good job. So yes, number one, you want to be a first-time home buyer. But what constitutes as a first-time home buyer? So the definition of a first-time home buyer is I cannot have owned a property or had my name on title for the last 3 years. So let's say I owned a home in 2007, I lost it in the crash, and I've just been renting ever since. I'm not considered a first-time home buyer. That's not true, right? So you would be eligible for a program like this as long as you haven't had a home within the last 3 years under your name. Now, the other thing that I also see is with these programs, right? There's no such thing as free money. There's borrowed money, there's grant programs that a first-time buyer can definitely leverage. And typically, on a lot of cases, you can qualify for a first-time buyer program as long as you have at least a 660 or 640 credit score in some cases and above. So again, it doesn't mean that I have to have an 800 credit score and I can do it. That's really one of the things that's a myth that most people think that I can't do it. Myth number two is I have to have stellar credit. Well, that's also not true. Yes, stellar credit is a beneficial thing to have because the way that banks see it is the higher the risk, the higher the rate. Lower the risk, the lower the rate. And so what happens when you have credit, right? Good credit, then they give you better terms. If you have maybe challenge credit or maybe not the best credit, you might see a little bit higher, but that does not mean that stops you from purchasing a home. So there are programs where you can get in with as low as even a 580 credit score with FHA. You could go conventional. They actually removed the requirement for minimum credit scores, and really it's going to be based on your profile, such as how much money do you have in reserves, how much do you have, meaning savings, 401k, how much is debt to income, so how much debt do you have versus how much money you make, and what can you afford in the home, so the lower, the less risk. And also, two, your credit score and your job history, right? How long have you been at your job? And so a lot of people think that I have to have stellar credit. In their VA loans, they don't even have a credit score requirement. And so I really want to empower and encourage most people that when it comes to the myth of I have to have an 800 credit score, that that there's programs out there that can get you there. Now, I'm also going to tell you a little secret. FHA has a program where they can allow you, if you're in between that 580 and 500 bracket, where if you have 10% down, they will, give you an opportunity to apply for a loan. And depending on all the other factors, you could also utilize that program to accomplish home ownership. So don't let it just think that, I don't have the best credit. That's exactly why you talk to people on my team. We also work with credit repair companies that can help you achieve the goal of home ownership. But credit's the easiest thing to fix. I can't tell you, you know what? Go get a job because you don't make money and then come back in 2 years, right? Credit's honestly the easiest thing to fix as long as you know how. And there's also a lot of programs that make homeownership affordable and a possibility. And then, when it comes to myths of buying a home, such as I have to go conventional because I don't want mortgage insurance, or, I get people that say, Vic, I haven't been at my job for more than 2 years. That's another myth that I see happen. Well, you don't have to be at the same job for 2 years. You just have to show that you've had a history of actually working for 2 years. So I get people all the time that say, Vic, I'm just going to start my new job and maybe I should wait. Well, where did you work before? I worked, at XYZ company. Well, how long were you there? 12 years. But I'm just starting this new job. I haven't even completed a week. Well, we could actually qualify you with not just the work history that you had at XYZ company, but also with the offer letter and also a pay stub, one paycheck when you go ahead and purchase a home. So again, a lot of people think that I have to have job consistency to do it. Yes, you do, but it does not have to be 2 years in that same job line of work. And then ultimately, the last one is, you know what, Vic, it's just too expensive. I can't buy a home. I'm paying $1,600 rent right now. Well, then I do what's called budget hack. If you see me and I say, okay, well, what's your average rent that you're paying, or how much are you paying rent? $1,600. And let's say the payment on a new home is $4,600. You're gonna be like, Vic, $3,000, that's a lot of money. So what I say is let's budget hack. Let's go back to our finances. Let's look at where are we spending our money? Let's go through our bank statements. Are we spending it on Starbucks, eating out, too much gas? What does that look like for you? Am I spending it out on trips and traveling? What does that look like? And then you can start to pretend like you have a $4,300 or $4,600 payment. Get ready, get prepared. And so what I usually encourage people to do is open up a savings account, start pretending like you can go ahead and make this payment. So $1,600 goes to your rent. The other $3,000 goes into that savings account. And what you're doing is two things. Number one, you're creating financial discipline to go ahead and be able to take on more of a payment. Number two, you're creating a savings account that you can use for a down payment and for the purchase of the home or furniture, or whatever the case is. And number three, you're actually seeing, well, where was my money going? I also get a lot of clients that come in and they end up saying, you know what, I can't afford it. But the reality is sometimes your rents are too low and you make too much money. And so obviously that money just ends up going somewhere. So don't be disillusioned in thinking that I can't buy it. It's more about how you qualify, and that's really our job to do it. So I hope that these myths give you a little more confidence, me myth busting it, into your opportunity to purchase a home and really turn from renting to home ownership and make it a reality for you. Thanks so much, and we'll see you on the next one. If you want more tips on how to build generational wealth, real estate, and wealth planning, and just maybe some hacks that'll help you in the future, make sure you hit that like and subscribe button so you don't miss out.